The AI revolution is real, Gary. Not in the too long distant future. You're gonna have an AI companion, an AI nurse, AI caretaker, AI can cook, AI can run marathon in Beijing nowadays, and that's gonna be linked through a global satellite system to do all the chores. So we're at the infancy of this AI revolution, and I believe really do that. And energy plays in the center, integral, irreplaceable part of this equation, of which I believe Fluorspar is one of the best vehicle to participate.
Welcome back to Metals and Miners. I'm your host, Gary Bohm. Today, we're diving into the dynamic world of markets, metals, and mining at this critical juncture in the cycle and the war happening over in Iran with John Lee, who is CEO and Executive Chairman of CleanTech Vanadium. John, it's an honor to have you on Metals and Miners. Welcome to the show.
Yes, Gary, thanks for the invite. I think it's maybe a little overdue. I've watched a couple of your clips with several of your esteemed guests, which I've talked to or have followed in the past.
Wonderful. Well, I am happy to have you here. John, let's start with this real quick. You're a metals and mining expert. You've led mining companies. You've raised hundreds of millions of dollars in the sector. You've been through multiple cycles. You're an insider in terms of knowing what's in demand, while at the same time understanding the macro forces, giving you an edge on positioning and investing. There's a lot to discuss today, but before we do, what do you hope for those tuning into this conversation today that they'll walk away with after listening to it?
Gary, I appreciate the introduction. I'm 52 years young. You made it sound like I was about to, but nonetheless, we're
about the same age.
I've spent 25 years in the mining investment industry. First 10 years as an investor. So, like many of your audience, I pull up the Excel spreadsheet and tabulating the ounces in the ground, etc. And then during the post-financial crisis, I've been just investing in hundreds of junior companies and running my own money. And after the 2009 financial crisis, I thought it'd be fun to be picking up a shell of which I was a major shareholder and turn over to try out the other side of running a mining company. And lo and behold, in the blink of an eye, it's been over 16 years, raised close to $200 million through this Toronto Stock Exchange, and founded several mining companies. My specialization is precious metals and critical minerals, because my background was actually in the .com industry. So I follow the likes of nickel and vanadium and fluorspar, some of which we talk about. And when I started my career in the early 2000 or industry in the early 2000, I befriended with some of my best friends, David Morgan. I read everything out there at Ted Butler. Was quite involved with GATA as well, with Chris Powell and Bill Murphy. So it's been a bit of a long coming. We can talk about geopolitics, and obviously I'd like to share an exciting sort of proposition and opportunity in the fluorspar space.
Okay, wonderful.
Towards the later part of the segment.
All right, wonderful. All right, well, let's start with the war that's happening over in Iran. The Strait of Hormuz being closed for around 60 days. President Trump is over in China right now with a whole consortium of various experts from the United States for a summit with him and trying to get some kind of grand deal going. We've got oil spiking. We've now got silver and gold breaking out recently. And inflation is also breaking out. What is your read of this entire situation?
Gary, like many of the precious metals analysts or people in the industry, I think we're a bit dumbfounded and caught in a bit of a blind to see gold having taken off from 1800 in early 2023 in less than 3 years. Gold has went up more than 2.5 times. And roll back in hindsight and looking at the recent developments since U.S. struck Iran for the first time about 6 months ago. Now it's quite clear why gold went up. I think it was, and call me whatever you like, but you know, I come to my conclusion through deductive reasoning and empirical evidence. Is a deal was made when Trump was brought on, and that's my thought, my thinking, that this war was going to happen, and it's not just Trump in particular. Everything is being well planned. If you look at the Middle East, the expansion of say the feudalism, the king Nabi, it started with I mean, there's Iraq, and then there's Syria, and then Jordan, and Lebanon. So it's just manifested right through the entire region. And the last missing piece is Iran. So everything was all decked up in the cars, and I went on other shows. I thought the real telltale sign for me to say that the war is imminent and it will restart again is every time when Trump was asked that what would it take for the war to go away, for peace to be negotiated, and his answer was Iran cannot have nuclear weapon. And it just echoed as I've heard that before. That's exactly 2001 with Iraq, that Iraq cannot have weapons of mass destruction. And well, Iran didn't have nuclear weapons, and I mean there's no evidence whatsoever that is on track in developing one. And this whole enriched uranium is just like Iran looking for weapons of mass destruction or chemical weapons and nowhere to be found. And even it was found, Gary, whether it's 400 or 600 kilograms. I mean, what is not to say that the U.S. determined that, hey, I think you might have another 100. Where did you hide it? So the whole thing is a pretense of what's to come, which is to occupy, to occupy Iran, and then from there stage a springboard towards China. Iran is only a mere an hour flight away from China, and U.S. had tried before with independent movement of Xinjiang. So what is to say there cannot be some sort of a protest, and then the UN or NATO sort of demanded peacekeepers inside the borders of China? Then all of a sudden you have a different game plan. And coincidentally, you talked about China. That's another thing that Trump, we can tell when he's not a very good liar, but when he's passionate about something, he's very clear. You can tell, which is, well, I mean, Trump said, well, Iran has ripped us off for the last 47 years. And well, if you just replace the word Iran with China, which is the same rhetoric that Trump had been promoting for the last 2 years. So what we see is a head-on collision between sort of the Western power, the unipower, and the really the three remaining axes of defiance, which is Iran and Russia and China. And really quickly to and the way the world is running like now is I've been talking the idea of king and peasants for a while, and then now I understood that it was the definition of feudalism. and this is what the world is pushing towards. But in order for feudalism to thrive, or the reason for that feudalism failed 300-400 years ago, was the mobility of people. So as people were able to move around, so when it was a king with the lord, the knights, everybody was sort of cornered in their little ecosystem. The king owns all the land. Interesting enough, right? That your taxes and condo fees keep going up, and then exchange for protection. And then what happened is over time, people will get wealthier with gold and silver. They can organize their own defense and their own private protection people, so they don't need the king thousands to pay patronage to the king. And then secondly, more importantly, is people become mobile as they have more money. So then people can move around, and it's a lot more difficult to control the pieces. So then if you look at where we are today, there's the 15-minute city. There's deliberate attempt to actually deliberately attempt to jack up the oil price, and then the mysterious explosion of all the refineries around the world. There's one just got blown in Oklahoma. There's one in Texas got blown up. There's one in India got blown up, and there's several ports and refineries in Russia, deep inside Siberia, thousands of miles away from the border of Ukraine, getting blown up. And the people that run the show are not stupid, and the whole thing's by design. What I mean by that, Gary, is that they want oil to be 150, 200. It's not about, they want interest rates to be high to go to the ultimate agenda of nothing and be happy, 2030 of the king and the peasants. And that's why they have this digital currency coupled with carbon credit system and social credit rating to handicap you. And the reason they have to conquer, or they have to have Russia, China, Iran bow down is because you're looking at the world's largest factory and two of the largest oil producers. So they cannot be acting on his own device. So the king has to exert their influence. It's kind of like rebels with its own production, right? Manufacturers and factories, they has to be conquered, and that's where we are today. It's unfortunate, but that's where they are. Well, just one more point is talking about the whole game theory is being mapped out, and unfortunately, the Saudis and UAEs and Qataris and Kuwait, which are just proxies of the king, they're just nice and they're happy actually to have Iran do the misdeeds in taking out all these oil fields and making the Middle East a big mess because. Again, like I said, the king doesn't like to see Dubai flourishing, right? Tax-free, mobility, free movement, attracting talents. I think they've had enough of it, and now it's time to put a plug on it. So either Iran bow down, which is great, or Iran act in defiance and blow up all the oil fields in Saudi in the Middle East, which is okay too. So either way, it serves the purpose, and that's where we stand today.
Well, I appreciate you laying that out. Let's shift our discussion over to fluorspar. Fluorspar is a metal of critical importance. It's currently needed for uranium enrichment, lithium car batteries, refrigerants, semiconductors, and more. Tell us about the importance of fluorspar, the access to fluorspar, and the growing needs of fluorspar.
Gary, you pointed out fluorspar, of which we just discovered about 2 years ago, and we've been on a rampage, well, not a rampage, but on a blazing trail in acquisitions in the United States. Is that fluorspar is used in over 170 applications. It is the most reactive element in the world, and for example, it's used in silicon etching. So if you think about, you have to etch on these all very fine patterns on the silicon, on the wafers, and you use fluorspar with exotic argon gas, etc., to etch the silicons. And fluorspar, because its reactive nature, is also used to carry all the critical minerals like germanium and gallium as the elements to imprint on the circuit board. And then towards the end, the fluorspar gas, hydrofluoric gas, is used to clear up all the chambers. So it's the carrier, the deposition, and the clearing agent. And because its reactive nature, it is used for enrichment. So the way I talked about much of it is like, because fluorspar is so reactive that even the nerdiest bookworm is able to sort of get it. It's like a Victoria's Secret model. And that's why it's able to react with uranium and levitate levitate uranium into gaseous form, and then from there you do the centrifuge to separate the U-235 from the 238. And U-235
could the process in enriching uranium happen without fluorspar?
Not all these applications cannot do without fluorspar because it's the most reactive element in the world. And consequently, Gary, and you have also Teflon, for example, the fluorocarbons, they are the most inert element because once you have two active elements married together, then it becomes the most inert property element. And that's why it goes into refrigerant. And so the fluorocarbons has a very low melting temperature, boiling temperature. So what happens is when the liquid hydrofluorocarbons enter into your home, it absorbs the heat, it boils into gas, and then it gets pumped out and then compressed again into liquid. So that's how your home is being cooled by these refrigerants. And the lithium hexafluoride is the agent, the electrolyte that carries the lithium ions swimming back and forth. So the lithium has to be married to 6 fluorspar for battery to work, and it takes 10 times the fluorspar in weight to as opposed to lithium to make up a battery. Interestingly, like Elon Musk talked about nickel being sort of the proper name to call a battery, because nickel is the cathode of a battery, but now it's being replaced by iron. Probably the right name to call a lithium battery should be called lithium fluoride batteries, because more fluoride goes into a battery than lithium goes into a battery.
So I understand how critically important fluorspar is for silicon wafers, for uranium enrichment, for refrigerants, et cetera, for lithium. The U.S. at one point in the 1900s through World War II, we were like a mass producer. It was a strategic national asset. But then at some point after World War II, that kind of stopped. And really now the U.S. doesn't produce any fluorspar. And China produces about or more than 60% of the world's fluorspar. And so we need that. We have the AI revolutions going on here, the robotics revolution, the electrification of everything revolution, all of this, the expansion of our economy, the refrigerant needs. I mean, everything you're describing is growing, and yet we don't produce any of this. And so how significant of an issue is it that China controls the overwhelming majority and the U.S. doesn't at all produce any?
Well, essentially critical enough that U.S. State Department of War, Department of Defense just tendered a $250 million fluorspar to rebuild its strategic stockpile, which was sold off in the early 2000s. And China produces 60% of the fluorspar, yet turned into a net importer since 2021 because of the AI revolution, because of the energy storage, because of nuclear enrichment. So they are competing for fluorspar on the international stage and being out there hunting for fluorspar. So China controls 60% together. Mongolia, of which China has a stranglehold, controls 70%. They run a monopoly in the fluorspar space. Fluorspar is so used for aluminum and for steel production. That's why during the World Wars, United States produced a lot of fluorspar for aluminum and steel and weaponry making. So the fluorspar is used in steel making, in that during high temperature, fluorspar is used as a fluxing agent, right? Again, it reacts, takes away all the impurities, all the different impurities, and protects creates that layer to keep the steel away from oxidation. So, but the production stopped in the late 70s when China flooded the market with fluorspar. And in the 2000s, the U.S. sold the strategic stockpile because they thought all the commodities are for battery rally, you don't need them anymore. Let me paint a big picture. I mean, Gary, there's a lot of things you need, like toilet paper, but you don't go and speculate on toilet paper. Is fluorspar, the way I look at it, is all about modernization and AI and energy. And it done like, sometimes investor has to be staring at an abyss, right, to understand the needs, such as critical minerals and the rare earth. Some of the rare earth deposits are selling for $10 billion now in California, and they've been recycled twice from bankruptcy Chapter 11, not nearly a few years ago. Another perfect example is you look at NVIDIA, which is now $3 trillion, and less than 5 years ago, Gary, and that goes into the money printing and the king, right, having his own printing press. Is like 5 years ago when Apple crossed at the $1 trillion valuation. So that's so crazy. And now NVIDIA $3 trillion, and Micron, which has gone up by 400% in the last 6 months, is $800 billion. And people were. But my point, Gary, is there's going to be a point of inflection for fluorspar, because it started out with chips for AI, and now people say, "Oh my God, you need memory." Okay. Now memory starts going crazy only in 6 months. This is after 2 years of run up by NVIDIA. But now as the data centers getting built and memories got put into these machines, and to turn on the machines, they realize, hey, wait a second, I need power. United States is building 3 or 4 of these data centers in Kentucky, in Carolinas, and they're just turning on. These machines they're measured, Gary. I'm in the power industry. They're measured.
So John, are you saying that fluorspar is essentially going to become a bottleneck issue.
Absolutely. Power.
Yeah.
Exactly. So to paraphrase, and it goes to get to the point, is fluorspar is irreplaceable in the energy industry, because if we look at the largest increase of electricity production in the world is renewables, and there's a couple of reasons for that. Now it takes $10 billion to build a one gigawatt nuclear reactor, 10 years, right? And since Fukushima, you have to withstand the impact of a 737. Economically and the time, there's not a budget for time, and there's not a budget for money to be building nuclear power plants. That's why there's not really barely a handful that's been building in the last 30 years. So the largest energy source, electrical source, power production generation is solar and wind, and the renewables are dominant. Like if you look at the United States, it's now surpassing, I think second or third. It's actually more renewable than nuclear power production next to oil. So the highest obviously is coal and nuclear, and then followed by renewables. The problem is, well, the renewable only comes when the sun shines, right, or the wind blows. And that's why Elon Musk talked about a lot of the energy issues could be solved in the United States by building batteries, because a lot of, like at night, like I don't know if you know, Gary, but during peak hours, you could pay sometimes 5 times, 10 times more for your electricity than at nighttime. So, hey, what if you can store the power at nighttime, right? And also to complement all these massive renewable projects in China, they're rolling out like massive right now, and with batteries. So this is not just people think batteries. People talk about EV revolution. This is only the stage one EV revolution. I think the EV revolution has mostly penetrated the car market already. Right now, the market share is probably 30%. So you go double to get 60%. But the big thing is energy storage. These massive batteries China is building, the United States is building, and what they're going to realize. And interestingly, these data centers are not measured in number of CPUs, GPUs, or number of chips or memories. They're measured in gigawatts. That's the power consumption. So I think in the next 2 or 3 years, we're very hugely bullish of oil. I mean, we also run a commodity fund. We're hugely bullish oil and natural gas in the United States. Oh my God, selling at $2.70 per MCF. I mean, it's like 20% of the international prices. Like everything related to oil and energy and batteries, of which fluorspar plays a critical element, you're going to see a renaissance of this once overlooked sector in critical minerals in the energy sector, because it's essential. It's essential in powering AI. And the AI is only at its infancy. You talk about robotics. Elon Musk is a visionary whom I follow very, very closely. Is he's going to marry his satellite company and with robotics. So now you're going to have all these autonomous robots that's linked to a satellite that's running on batteries. And these robots can self-replace their batteries because they have a backup battery, and then power runs out, you just go and stick another battery in there. There's already robots that are making coffees, doing laundries, cooking, and driving. You don't even robot do driving, it's autonomous driving anymore. So doing checkouts, everything. So
it seems to me that
you could be seeing a robot for every household. Yes.
It seems to me that with what's coming, with what they're doing, with what's coming, everything on the periodic table is strained, and everything on the periodic table can be a roadblock, and they're willing to pay any price that they need to for any of these items on the periodic table in order to ensure that they are not a roadblock. And so, with fluorspar, we're seeing the prices rise pretty dramatically. It's up 55% since the pandemic to around $480 a metric ton. Is this what we're actually seeing? Are we seeing the powers that be willing to pay any price, and they're basically bidding up the price of these items?
You're right. The price has gone up 50% since 2022, and it's gone up 500% since the early 2000s. The trajectory is quite stable, it's steady going up, but it's steadily started going parabolic because the changing landscape for fluorspar has changed, because China has become a net importer, and that's the biggest reason. And now they're tiptoeing, right? They cannot show their hands too much, so that's why they cannot just go. They want to control as much resources in Africa and elsewhere before they let the cards go. And that's why they want to keep a lid on fluorspar for as long as we can. At a $600 per ton, you're looking at around 20, 30 cents a pound. So it is not even though the price has gone up so much. I mean, you look at copper at $6 a pound, and zinc at $1.50, and then lead at 70 cents, 80 cents. So I mean, overall, fluorspar at 20, 30 cents a pound.
So negligible impact on the consumer, but powerful impact on the investor.
I would say call it price inelastic for these applications. Like you're building a $10 billion power plant, right? And that's the sort of the jingles. That's sort of the talking points from the uranium bugs, that uranium, even at 200, 300, 500, compared to a $10 billion power plant they're building, is negligible. Well, same with fluorspar. Well, that's not being uranium at 200 being insignificant. Then how is 20 cents a pound for fluorspar? Take that. So it's price inelastic. I would say fluorspar prices got to at least triple or quadruple.
So what's the real scope?
What's the
real scope of the? Okay, what's the real scope of the opportunity here that investors need to be aware of?
By fluorspar mining companies. One of the companies of which I'm the CEO, the name is CleanTech Vanadium. We were in the vanadium space, but vanadium prices sort of came down, but because it's used also in steel rebar constructions and steel rebar production and construction activities sort of cool in the global economy. When we first staked and discovered this fluorspar opportunity since last July, almost a year ago, when we acquired the first fluorspar project in Kentucky, the stock was like 3 cents. I say it's going to be 10 bagger. I never counted any program, Gary, and touted that any stock would ever go 10 bagger. But I did for CleanTech, and the stock went from 3 cents to 50 cents 6 months ago. The market cap is still at about 100 million. That time the market cap is 100 million. Now the stock is settled down to about 20 cents. But the market cap right now is at around $30 million. Just to put in context, some of these germanium stocks, antimony stocks, rare earth stocks, once they got listed on IZMX with just a small flotation mill, you can build for $10, $20 million. You're looking at a market cap, starting with $1 billion range. So, and some of our Australian comparables, they're selling at $500 million right now. A fluorspar project, $500 million, that's being invested and grabbed by the Japanese. Right now, we're in extreme early infancy stage. And Gary, you've been in the market for a while. You know that the U.S. investors and audience are always late to the game. I mean, case in point, right? Look at critical minerals. Look at just the lithium, another example, and even energy stocks right now constitute only 3% of the S&P 500. So I think the whole energy sector complex, or the critical mineral sectors, are completely overlooked, and we're like in the first or second inning for fluorspar, and creates incredible opportunity. Presents what I'm hoping for is to impress your audience on this very exciting opportunity, of which there's very, very limited downside, especially when you're looking for a U.S.-based company looking for U.S.-based fluorspar production, because you don't know the certainties of these tariffs, and it's a big gigantic mess as to what's going to get tariffed and whatnot, and quota and all that stuff. So you want to make sure if you look for fluorspar opportunity, you look for U.S.-centric, U.S.-based projects.
All right, so this is a perfect opportunity to kind of transition over to discussing CleanTech, your company. Tell us about the Kentucky Fluorspar project, how far along it is, what the resource looks like, what's the next stage, and how is CleanTech positioned to help support the U.S. fluorspar supply chains?
Yeah, we are Kentucky in fluorspar is like Battle Mountain to gold. It is where 95% of the fluorspar came from during the 1970s era and during the two World Wars. The size of this area is massive, over 600 square miles, of which CleanTech today controls about 10% of the area. But yet, we have probably a footprint or presence in all the major trends. We've done 6 separate transactions to date. Control over 17,000 acres. That's the size of Manhattan. And as of today, I would say CleanTech is probably one of the dominant, or if not largest, landholder in this Kentucky Fluorspar District, which is the largest in the United States and probably arguably the largest outside of maybe a couple of in Africa and in China, in Mongolia. USGS stated, U.S. Geological Survey stated the resource, fluorspar resource in the United States is only 2 million tons, based on their outdated, antiquated data. Based on the existing drill holes and available historical documents for the assets that we have acquired, CleanTech has acquired 740 drill holes, 17,000 acres. We estimated a historical resource close to 10 million tons of fluorspar. But obviously, that's not a modern standard. So I do the validation drilling and a lot of verification work, which we're doing right now. But that would be enough to power the U.S. fluorspar consumption for 20 years. Obviously, U.S. is consuming today 500,000 tons of fluorspar, 500,000 tons. China is doing 6 million tons. It's not enough. So that's 12 times. If the U.S. just to catch up 30% of energy or critical minerals independence, it's going to need 4 times more fluorspar to realize the administration's dream of energy independent, semiconductor independent, refrigerant independent, steel, aluminum production independent, battery independent. They're building batteries, they're building AI data centers, they're building semiconductor plants, they're building steel plants, aluminum plants, battery plants, all of them, every single one of them require fluorspar. So then, and I would say the situation is even more acute than critical minerals because China has less than 10 years of fluorspar reserves, whereas China has over 60 years of rare earth. So I see a head-on collision, a deja vu, and it is now an incredible time to take a look at CleanTech, of which our mandate, Gary, is not to be drilling out our assets to prove it's world-class. Everybody who looked at our project knows it's already enough for us to explore for our lifetime and maybe next. It's a generational asset, but our key here, Gary, is to put the mine into production as soon as possible. And fortunately, Kentucky is one of the red states are pro-mining. And it's one of the most friendly, I would say, place to do mining business in the United States. And we have to explore minerals in the U.S. like Nevada for the better part of a decade. So our timeline, actually, for the first time, I kind of on a show to talk about it because we just finished our sort of project development plan, is to put a shovel in the ground by this time next year. The processing plan might take a little longer, which means that if we were able to, if we were to feed fluorspar to our processing plant on site, that maybe you're looking at the first acid spar production in 2028. But if we were able to find a toll mill opportunity or repurposing some of the existing facilities that can process our fluorspar, we could be churning out commercially marketable product, industry compliant product, sometime in 2027, and that will make us, one of the few, if not the only fluorspar production in the U.S.
So, are you moving straight towards that instead of establishing a resource? And then the second question I have is, what does your cash runway look like right now in order to get to the next phase you're describing?
Right. We have well-documented historical resource, tens, millions, not tens of millions tons. We could be drilling till the fat lady sings. We are going to, there's going to be a drill program that start in around July in the summertime. But that drill program is a modest, maybe 20 holes, 100% designed to prove out the resource to supplement the mine plan. So we're looking at 500 ton per day mill, 180,000 ton per ton, 180,000 ton per year production in mining and processing. So we're looking to publish a resource of 100 to 200,000 tons. It's a much a bit, Gary, like the Coeur d'Alene model, right? Or like Hecla. They don't go out there drill till the fat lady sing. They don't go out there drill for the sake of developing resource. That's very expensive, especially for a junior company without cash flow. So, but rather our goal is to, hey, let's find out where we're going to sink a hole, where we're going to be mining, and make sure that there is high confidence level of the design and extraction of these minerals. And our cash position is still got about $1 million in the bank. We're very frugal. We share a management team with Silver Elephant. So we have one team that's managing 2 companies. To build a mine actually would not be in the tens of millions. So I think now the idea is to try to, it's such a cliche, it's a de-risk, right? But I want to take all these different steps to demonstrate that there are no impediments from permitting, from mining, from technology, from environment, from local stakeholders. to bring the production on stream as soon as possible. The way to do that is not about talking or putting things on paper, but literally drilling, getting community agreements, submit our permit applications, and just to demonstrate that there's enough, like we can be drilling and be finding fluorspar forever. But the goal is not a grandiose sort of gesture in proving up tens of millions of tons, but rather we want to go into production as soon as possible. And certainly at today's fluorspar price, which is around $600 CIF delivered to the United States, the numbers are very, very attractive because $600 a ton is for 97% grade calcium fluoride fluorspar. The stuff we dig out of the ground, Gary, will be averaging close to 50%, which means the stuff just in process, you dig it out of the ground, is close to $300 a ton. And just put it in context, there are gold mining companies in Nevada, Eric Sprott and the likes, they're $1 billion, $2 billion market cap and digging stuff out of the ground at an ounce of gold, right? Well, at 1 gram of gold, which is like $80, $100 per ton, but our stuff is out of the ground 3 times as much. So we're very confident, very, very confident of the project economics. We're taking a aggressive approach and say, you know what, we have good mining team, we have good exploration team, we have good permitting team. Let's just take the marching order, get the stuff into production. And we have built plants before, so we know what it takes. We're doing right now that in Bolivia. We're mining in Bolivia. So I think it's just all the pieces coming together. There's going to be a slew of news releases to come for the company. And as you can tell from where I'm talking, it is truly a generation opportunity that the audience just needs to take a look.
Okay, yeah. John, where do you see the biggest potential pitfall between now and the time when you would be mining the fluorspar, where things can maybe go off course a little bit? And how are you mitigating that potential pitfall now?
Yeah, Gary, I've been around for 25 years. I've invested dozens of companies that went to actually zero. I would say not say dozens, but more than a handful of companies that went to zero. So I've been through how things can go wrong as an investor and as a mining companies as I toured and visited over 30 countries and scoured over dozens of projects. Basically go into the project, underground, caves, everything. I don't see a big impediment at all. To be honest, Gary, and then I say that as a qualified opinion, as a CFA and being in the mining industry for 25 years. Let's talk about permitting. I mean, Kentucky is a red state. We met with the Kentucky Mine Reclamation Enforcement, and they welcome investment, they welcome mining, they understood critical minerals. The U.S. government is making available $30 billion for critical mineral development, of which fluorspar is one of the top listed candidates in the periodic table. So you talk about unlimited funding, which is the case. The government has just funded $3 billion for Korean zinc to add on a germanium plant, which is a trace element of insignificant revenue, but yet the government is investing $3 billion to build a little add-on module to reprocess the waste materials of a primary zinc deposit. That shows the amount of money that's available. We have very loyal shareholders that have financed us tens of millions of dollars in the past. They continue to be they are continuing to finance us. We already have unsolicited interest from off-takers, from refrigerants, semiconductors, battery, car manufacturers, from Qatar, from Taiwan, Korea, Japan, and as well as the United States. So if we can demonstrate that track of putting the mine into production, we're going to be attracting people that are able to finance the mine for us. And it's, like I said, it's not going to be hundreds of millions of dollars. So financing is not likely to be an issue. I would say, Gary, if I were to put a pin, is maybe there's some geopolitical issues that might temper or hamper or sort of impede, so that might affect the general equity market. And maybe there may be more dilution than what we've liked. So that maybe is one challenge that we might have to overcome. I mean, right now market cap has 20, but so financing a company at 20 million market cap is different from 200, right? For the tens of millions that we need. But in terms of recovery, a lot of the mining companies like to hide out in the closet until the last minute when they have milked investors enough. And it's, oh my God, my feasibility study said I cannot recover the metal after 10 years of on the project. Are you kidding me? But we're very confident, Gary, recovery is not an issue because this is a mine district. We've got the chemical company, refrigerant company come to us, John, oh, congratulations on the acquisition of the Coram project because we purchased based on our historical records from Coram 50 years ago. So, oh, great. They checked the box. So resource is not a problem. Access is not a problem. Utility is not a problem. Community is not a problem. So, and the macro thing is not a problem. Even, I just cannot imagine, even if there's another nuclear disaster, there's in the faintest idea, lowest probability, even if uranium is taken out of the equation, which will constitute around 30%, about 20% of the fluorspar consumption, well, there's still batteries, right? There's still refrigerant. There's still steel production, aluminum production. It's a well-diversified applications of utilities for fluorspar. So I don't see the macro being a problem. So therefore, I would say maybe dilution is being an issue. I mean, that is obvious. But at the same time, it creates an opportunity. I mean, at these bargain prices, and with our peers are trading at 10 to 20 times our valuations in Mongolia, which I'm at right now, and in Australia, U.S. will wake up. I think the writing's on the wall. We don't have to wait for something pending. It's not like we're sitting here twiddling our thumb waiting for higher fluorspar prices for the mine to be economic. So I think all the elements to make this a giant success story are already in place. And that's why, I mean, Gary, I'll come on your show here again. I will not be surprised of another 10-bagger from here a few years from now at all.
Awesome. All right. So I've got an investor question here for you. Right now, the mining sentiment is near historic lows as there's been just an extreme sentiment washout since the start of the Iran war. The Western world, as you've been describing throughout the last 40 minutes, badly needs a mining super cycle to get the necessary supply output that's going to drive all of the AI and the electrification revolutions that are now in motion. And also for the U.S. to properly be able to compete and stay ahead of China in all of those races, the U.S. needs supply chains, needs these critical mineral supply chains, except they haven't been investing in them for decades. And so there is no supply chain, and mining takes a long time to get that supply to come out the other side. So is this precisely the environment for an investor where the speculative froth has been really entirely wrung out of the market, and it's creating this great contrarian setup and opportunity to position for a whole new leg higher in the entire mining complex?
Yeah, Gary, you rightly pointed out, it takes in the United States, if you make a discovery today, depending on where you are, just say Nevada is one of the most mining-friendly countries. And if you made a discovery on federal land, which is belonged by the Bureau of Land Management, that's another issue, man. I said, Gary, all of our projects in Kentucky is actually private land. So we don't even need a drill permit. Kentucky's like, why do I have to issue a permit if you're drilling on your own land, right? So that's the extent of the ease of doing business in Kentucky. But if you were to make a discovery on U.S. federal land, it takes 10 years to get a project permitted and financed and construction. I would say in 25 years of doing business in the mining industry, it's one of the most asymmetrical business in the world. Even insiders get their investments wrong. Like, You'd be amused. I talked to some of my peers and my friends are running mining companies or are financing mining. Like even the geologists, okay, the mining engineers. If you look at their investment portfolio, they always have a few duds out there. So I would say a couple of things. Well, 3 or 4 things that came to mind, Gary, is first, I would not sort of put all the mining companies in all one basket, because especially in the junior mining industry, if you look at the discovery, high-risk exploration arena, only 2 or 3 companies or discoveries will eventually go into production for a slew of reasons. People joked about if you're successful in the mining industry, you can run everything, because there's geopolitics risk, and mining is like a utility industry. The government know where you are, what your margins are, so all the levies on you for water, power, air, carbon, everything is labor intensive, capital intensive, low margin, and for the commodities price cycle. So it is a very complex industry. So you cannot just group all of them you cannot put the babies in the water too at the same time. Is that there are a lot of few shining companies, right? Like for well-run company, in a good jurisdiction with the competent management, there's been a lot of companies are 5-10 baggers even during the down cycle, and also some of the specialty mining companies, of which the underlying price is kind of 5 or 10 times, of which then there's plays good leverage. Now is the time to be selective, just like it's always been, because as I mentioned to you, there's a lot of what I call social misfits, because I've hired dozens of people, and a lot of these guys are just they're just unfortunately what I call the social misfits. I can't really think of a better analogy. And so there's a lot of people in the industry that are drill a couple of holes, raise money, drill a couple of holes in the summer, and go off to golf for the rest of the year. There's still a lot of them out there. I will purport to say probably 70% of the mining companies are like that. And you got to be very careful in what you choose. And also the mining industry as a whole just hasn't received the kind of exposure. If you talk about energy sector, which is people talk about being overlooked, like Jeff Curry saying, energy is you got to double weight, triple weight. Energy is 3% S&P. I think mining is probably not even 1%. But that doesn't mean to say that it's going to go up a lot more in the future. We don't know. And then one more point is that this mining industry, they're not for generalist investors, right? Because people invest in mining are speculating that prices go higher up, or the optionality factors of think of it like your own printing press, when the stuff resources does eventually turn into revenue. So if you look at the dividend ratio or price earning ratio for the mining companies, they're not undervalued. If not, they never pay dividend in the first place. So to get more general funds to come into the mining sector, the mining companies, the management have to go beyond an exception. They have to follow the rule, which is generate cash flow and generate cash flow and deliver earnings. And right now, very few are doing that, and that has to change. You got some of the large company like Court and Lane, right? They're just buying because mining is a resource depletion business. So you have to keep buying stuff just to maintain the status quo, and that's what that's been doing. That's why most of the mining companies have been doing, churning wheels, acquisition at great expense, and then just to maintain the status quo. So I think in answering the question, there's a lot of crooks running in the industry. And secondly, the mining industry not delivering dividends. It's being overlooked. And the prices probably have to go higher for just to catch up to inflation. Right now, they barely are doing that. One other thing, Gary, at the start of the show, I talk about a bit of a conspiracy theorist, but I've been in the industry for 20 years. It's my strong belief that not only are the cartels managing quote unquote gold and silver market, like in a day when silver is $120, a billion ounces of silver traded, 750 million ounces trading that day when silver went from 120 to 80, and that was an entire annual production of silver. So this goes to it is probably likely the most manipulated commodity on earth. That there would be 750 million ounces worth of trades in a single day when that's the annual production. That they are also heavily manipulating the prices of silver mining companies like First Majestic. So even Silver Elephant in earlier days, because the company name has silver in it, I will venture to say on a quiet day, more than 50% of the volume are traded by algos that are designed to suppress the mining shares. Because certainly you cannot have metal prices are low, but yet you have mining companies going high. As metals investors look for an outlet to park their money. So they're double whammy, not only on the metals but also on the mining shares. But
John, to that point, if they keep doing that indefinitely, then the CapEx cycle will never kick off and they'll never get the supply output that they need. They need the supply output in order for the AI revolution, the robotics revolution, all the data centers, the electrification of everything, all the build out that they want to do on nuclear energy sites. We need stable supply chains and we don't have them. And if they keep manipulating these mining companies downward, there's never going to be a CapEx cycle.
Well, there are two ways to go. The mining companies, yes or no, Gary, mining companies, the way I look at that is a derivative instrument to the underlying metal. when I say derivative instrument is you can almost look at like a call option, right? It's not delivering cash flow. Maybe metal prices are not high enough for the project to be economic, so it's like an out of pocket stock option, call option. You probably know how a call option works, and it also has a time decay. So the time decay for a mining company is the G&A for running the company, and also as a mining company, right? The decay is depletion of reserves and resources as stuff is dug out of the ground, and for mining companies to thrive, first of all, it's got to have higher metal prices, and it's got to deliver dividend. Eventually, Gary, if you have a earning rate price to earning ratio of 5, P ratio of 5, like some of the oil and gas companies, investors cannot overlook the situation. They have to bid up. So the manipulation can go as far as there's a limit to it, meaning that if the cartels see a freight train coming down the road, almost like an army, right? Or tsunami ashore coming on shore, they're going to retreat. And that's why, Gary, so that's for the mining stocks. If you look at metals, let's talk about for metal for a bit, is every time when there's a bid and volume in the COMEX or on the CME, like the cartels actually will look at it and say and determine is this a real physical buyer, or is this a paper, somebody, a fund of which they can string them out and then take them out of the market. It's very clear. Gary, I can see the tape, the different type of buyers that's coming. Like, for example, silver went to $5 a couple of days ago. Reportedly, some Qataris or Middle Eastern buyer. There's some credence to that because the dollar's up, gold is down, but yet silver is marching forward along with copper. So the recent breakout of silver is not so much geopolitics because gold is still lying below 50-day moving average, whereas copper and silver is broken out of the 50-day moving average, with the copper establishing all-time high. So it seems to me right now silver is trending towards industrial side of things. So this silver is a lot more difficult to predict than gold, which is a lot more precious in nature. But in the end, Gary, the answer to your question is there has to be physical, real demand from gold and silver, hoarding or industrial or otherwise. And from there, higher metal prices is going to drive mining shares higher from optionality point of view. For these guys are looking for a speculative instrument. But for the mainstream investors to come in, the generalist fund to come in, the management has got to put the house in order and start delivering cash flow and dividend to shareholders. That is the answer.
Well, this has been an incredible discussion with John Lee. Before we wrap up here, I want to direct everyone who's interested in the metals and mining sector to dive into our Substack at metalsandminers.substack.com. When you join the quickly growing community, you're going to receive a free gift. It's a report. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." That's a famous quote by investing legend Ray Dalio, and that's the name of the report you'll receive. Now, I'm positive you've been enjoying the conversation that John and I have been having. Please let him know. Hit the like and subscribe button and leave a comment below the video. All right, John, we're going to wrap up here. Would you please share a key takeaway that you want to leave with the viewers to keep in mind, and then let everyone know where they could learn all about your work, how they can connect with you, and learn about your company?
The AI revolution is real, Gary. Not in the too long distant future. You're going to have an AI companion, an AI nurse, AI caretaker, AI can cook, AI can run marathon in Beijing nowadays, and that's going to be linked through a global satellite system to do all the chores. So we're at the infancy of this AI revolution, and I believe really do that. And energy plays in the center, integral, irreplaceable part of this equation, of which I believe Fluorspar is one of the best vehicles to participate in this new renaissance. I'm actually a very optimistic guy. I think the market's going to trend higher. I think some of your audience may say the market's going to question. I don't buy that theory, and so therefore I think there's some good times ahead outside of this geopolitics, which gets sorted out in time. Check us out, Gary, at CleanTechCTV.com, and you can go to our YouTube. We put on a lot of interesting sort of a knowledge-based videos about Fluorspar, how it's used for. I look forward to having some of your audience come along for the ride. You can get hold of me on Twitter as well. I'm quite active there, and I do reply to inquiries there. Yes, Gary.
Wonderful. I'll have all that information up on the screen. Everybody who's tuning in, head over to the description area right now. You'll see links. Click on those links. You'll get over to the website. You'll get over to John's X account, the YouTube. and you could learn more and ask some questions, etc. John, thank you so much for coming on to Metals and Miners. You've been so generous with your time and your analysis and ideas. It's been a lot of fun to spend this time with you and educational. And I look forward to having you back on sometime soon. Hey, everybody else who's tuning in, thanks for watching. I want to direct everyone who's interested in the metals and mining sector to dive into our Substack at metalsandminers.substack.com. When you join the quickly growing community, you're going to receive a free gift. It's a report. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." That's a famous quote by investing legend Ray Dalio, and that's the name of the report you'll receive.